Hey, good morning, everyone. Futures Brizio here. 10 a.m. on Tuesday, November 11th. Happy Veterans Day for all of our great vets out there in the U.S. and elsewhere. And just take a moment to thank them, uh, even if it's just privately. But certainly, if you have someone in your family who's a vet, make sure you recognize them today. And again, thank them for their service and their sacrifice in many cases. Okay, so we're just going to jump right in. And I'm going to be on use TradingView here mostly for today's video. I may jump back over to MetaTrader, but I just want to use this for a couple of things. And you'll notice on TradingView that I've got a different indicator on here. I've talked about this indicator in the past, so I'm not going to spend a ton of time on it, but I have regular candlesticks. And then this indicator is a Heiken Ashi Smooth indicator. I have it in my favorites, I believe. I don't use all these anymore, but yeah, it's called Smooth Heiken Ashi by the Backtest G. Well, I don't know if there's more to his name than that, but anyways, it's this one. And the only change, well, I'll open the settings here. I changed the smoothing length to 1 because basically what I'm trying to do is get it to almost act like a Heikin Ashi candle. And Heikin Ashi candle mirrors the current candles in terms of how they print, but they're just calculated differently. So this defaults, I think, to 10, which smooths it out a little bit too much. I want it to mirror more of the actual price action. But the advantage to having it is of using this versus a Heikin Ashi candle. And you know I have Heikin Ashi candles on my MetaTrader chart. Is this almost gives you the best of both. It still allows you to see candlesticks, but gives you the advantage and the benefits of Heikin Ashi on top of it to smooth out noise. Okay, so you get to see both. And the closest way I can mimic that Heikin Ashi characteristic is to just take the Heikin Ashi Smooth and change it to a smoothing length of 1. Now they also have a bunch of other settings in here, like you can change the way it calculates the moving average, because that's essentially what this is. It's sort of like a moving average. I just left it on EMA. That's the default setting. They got a whole bunch of them here. And I've clicked through most of these, and they'll make small differences, but I don't really see any advantage to any of them. So I just left it as EMA. After Heiken Ashi I left. I don't know if this is the default setting now, whether it's 20 or not, but I just left it. But I changed it to 20, and that just has to do with just basically the offset on the chart. So these are my settings: 1 EMA, 20 EMA, and then the only other thing I did is I took the wicks off. When you change this thing to because it's not really meant to be used the way I'm using it. So when you change the smoothing length to 1, you end up getting wicks on all of these red and green candles. Doesn't matter, even if it's like a strong downtrend, you'll get wicks on both sides. And it's just very distracting. And so I just took the wicks off altogether because I don't really care. I'm still looking at the candlesticks here. But it still will give you the smooth price action. And you'll still have the different size candles here. Heikin Ashi candles. You can see they get smaller as price tends to run out of steam. And then they'll get a little bigger as when price is in a strong trend. All right. So that's what's on here. Okay. So if you want to use it, you can. If not, it's not really the point of this video anyway. So, but that's the only indicator I have on here. So, and like I said, I'm just using regular candlesticks on here versus on my MetaTrader chart where I've got just Heikin Ashi candles. I do have a Heikin Ashi smooth indicator that I found for MetaTrader. The only problem is when there's no offset. So if you put it on your chart it like lays almost right on top of the candlesticks. So you can't really see the candlesticks. Like on here, you can still easily see the candlesticks because the Heiken Ashi Smooth is kind of offset. It trails, it's following the price, but it offsets a little bit, so you can at least still have full view of the candlesticks. When you do it, I don't think I have a template for it anymore. I used to. No, I don't. Uh, it lays the indicator almost right on top of the candlestick, so it makes it really tough. You can't see the candlesticks entirely, and that kind of defeats the purpose of using the Heiken Ashi Smooth. So over on my chart, my MetaTrader charts, I just have to pick one or the other. I really can't use both. But on TradingView, it's a little easier. All right, so that's Heiken Ashi Smooth. It's basically just taking the best of Heiken Ashi and the best moving averages and making it into an indicator. That's really all it's about. So, and again, the idea is just to smooth out noise in trending markets, and it still allows you to see sideways markets like this. But it also still allows you to see the candlesticks, which, as I mentioned, is still kind of important, especially for entries and exits, because Heiken Ashi is not really showing you the actual price. And I talked about that before, so I don't want to beat a dead horse. Okay, so we'll just jump right in. And as always, make sure you smash that like button, subscribe to the channel, and any questions or comments, leave them down below. So this is crude oil, 4-hour chart. And I was talking about this thing being basically inside of a range here for the last, basically inside of this range here since about the beginning of the month. And it looks like maybe we've broken out. You can see I am in a long position here. It's in a small profit right now. It's not really doing very much. I did take this kind of breakout trade. And if we go down to a shorter time frame, we had this little pullback early in the session right in here. And as soon as it started going up again, I jumped in. Now, I wouldn't be surprised if this thing rolls over and comes back and maybe tries to test this trend line from above, but I'm thinking it may have already done that back here. And this looks, like it really wants to go higher. So I jumped in, and my stop loss, you can see, is sitting back underneath the trend line, underneath about 2 swings away. And we'll just let this go. And we'll see how it goes throughout the day. But we could be seeing a little bit of a turn higher. And remember, I had said on the 4-hour chart, we had this really bullish move up. You can see all these green Heikin Ashi candles and just the strong momentum here. Took out several little small layers of structure, basically 3 layers, 1, 2, 3 layers, went up. Came back to this more major structure level here, which is indicated by these green Heikin Ashi candles on the reversal. You can see we don't have any green here because these little pullbacks are basically just all part of this leg down. Whereas this is kind of like, I look at this as this is the leg down, this is the pullback, and we have all these green candles kind of suggesting that. And you can see we came right back up to that and we pulled back. And again, I'm not a big fib trader, but if we throw a Fibonacci on here, we came back to about the 50% retracement right in here, for whatever that's worth. And then we chopped around. This is where I was talking about that sideways action. And then, I threw a trend line on here. We had 3 solid touches. But you can see we were putting in higher lows all along here, and we're not able to make any new lows after this one. We had 1, 2, basically 3 attempts to go down, and each one failed. In fact, went a little bit higher on the lows. So I felt like that was maybe setting up to some accumulation going on here and see a little break higher. And I would expect to see prices go a little higher. They've been so low, even despite, with the president talking about more production. We also are heading into more of the season for higher prices with heating oil. However, let's see. Yeah, so basically we're outside of the seasonal period, which I've mentioned. October through early December, we tend to go down. So, but again, we've been down so much, and this is what I've said multiple times about seasonality. It's great if you have the seasonality as an extra confluence, but the price action and the commitment of traders is more important. Again, I've said it 100 times in the last several weeks. We still don't have commitment of traders data updated. We may be nearing the end of the shutdown of the U.S. government. The Senate apparently has passed it, so now it has to go back to the House. Assuming they pass it, then I do expect that the president would sign that and we would get the government open again, which should get this data flowing back again. Although I don't know if there'll be a delay in that or not. So, but that's kind of how we look. But, one way or another, this looks like at least some short term bullish run here on crude oil. So it's not my favorite market to trade, but, if I see something that looks halfway decent, then, I'd probably consider it. Now, from the standpoint of where you could be wrong, I've talked about market structure still being the most important thing when you look at these and not just drawing trend lines and, things like that. And to me, we do have a market structure level sitting right here, right? So we had this high led down to this low, and now we've pulled back. And so there is risk that, between where it is now and this yellow horizontal line that we roll over and start going back down again. And just kind of, the trend line is just kind of fools you into thinking it. So I'm going to watch this one, to see what happens with that. But, we do have structure kind of sitting up in this area. And really, if we want to really see price be more confident in its move up, I think we would need to see, and you can even include this high just below it, something to this effect right here. The price to get through this orange box and go higher. And you can see, actually, after I just drew that, that's exactly where price is sitting at the bottom edge of this box. So we'll see what happens. If we fail to really get going any higher here, I may just close this, even though it's only in a small profit. I may just close it. But that's what I'm talking about, that, yes, breaks of trend lines and Heiken Ashi candles and all that stuff is great. But if you don't break market structure levels on whatever time frame you're analyzing on a reversal trade, then it's probably there's a strong chance that trade will fail, okay? Because you haven't actually proven anything on this time frame. Now, this is the 4-hour chart, so that's what we're looking at. But really, anywhere between about the 1 hour, maybe not so much on the 1 hour. Well, yeah, I would say so. I mean, I guess we could say on the 1 hour, this was our structure level that was broke because we had this little pullback led to this low. So, and we've broken that one already. So the question is, what structure level are you looking at as being the key one? Well, this is, when you look at this one, this is kind of like a resistance area, right? Because you had 1, 2, 3 touches on it on the 1 hour chart. Okay. So I don't always look at those as being the best ones because these are just kind of like retail trader resistance areas to trade off of. Okay. And you can just see very clearly the touches against this area. Okay. That it broke through. Up here is more of, to me, is more of an actual area of interest of market structure because you can see we had this high, came back, retested it, kind of tapped some more liquidity in here, and then went down and made that new low. So, and this is inside, this is where these Heikin Ashi candles can help you kind of determine where the actual real pullback is. And with this one, with all these green candles, to me, this represents a more valid resistance or supply area, whatever you want to call it. Okay. But it's definitely, to me, a better market structure area than down here. All right. So we'll see what happens with crude oil. Like I see, it's a pretty small position and small profit right now. All right. One sec, guys. Okay, cool. So that's it on crude oil. All right, so let's move on just quickly here. So rice, Just switching over to commodities here. 4-hour chart of rice. Again, we had all these lows down here. We have this, very, very clear, strong downtrend on the 4-hour chart. You can just see all the way down here. Just, tiny little pullbacks, a couple little green Heiken Ashi candles, but, this has just been a very strong pullback. But you can see something's a little bit different here. We've got multiple touches on this zone and price failing to go lower. We did kind of have that back here, but we had one touch, right? We had these two areas, one attempt to go lower, price went up, and then it went down. Here now we've had multiple touches of this area or attempts on this area. And then again, we're looking at another potential trend line break here. You can see I have drawn. But you see I have this line, which is I'm looking at is kind of like a market structure area. It's not great because usually a valid market structure area has to lead to in this case, a new low. And it really didn't. I mean, it came down and retested this area, but still, if you want to look at areas where, say, okay, if it breaks this area, that probably is going to change my bias. I still think, I'm looking at this area. So could this be the switch higher? Maybe. And I remember from a seasonality standpoint, rice should be going up basically this month through January. Okay. So we do have seasonality on our side, but again, we don't have COT data. But we do have seasonality. So is that what we're starting to see here, a seasonality turn? I'd like a little bit more confirmation, but if we can get some real, some more bullish momentum up here, and especially if we can take out, say, this area right here, then this probably will go higher. So it's definitely on my watch list, but I'm not really taking any action on it yet. All right, on to soybeans. So I have this arrow. I was just playing around last night, thinking maybe we'd see a pullback here. I don't know if we're going to get it. If I did, I was looking at this area as being kind of a structure area. But this market, again, from a seasonality standpoint, is pretty strong. So I don't think this is going to play out. And it looks like it's trying to go higher here. So if we make a new high, then obviously what I would do is move this line up, and this would become our new structure. That's not really valid yet because it hasn't made a new high. There's just kind of a pullback area here. We did break the Heiken Ashi, this kind of Heiken Ashi ribbon here, but we didn't break the structure level, which again is sitting, down here. So basically this market is still in an uptrend. And this is probably an area where buyers are obviously trying to step back in on this. Okay. So we'll keep an eye on that. But that is looking fairly bullish right now. All right. So now we'll move on to soybean oil. And you can see I'm holding us along on this one too. And basically, as I was talking about yesterday, soybean oil has really been the laggard in the soy complex. I mean, soy meal and soybeans has really been bullish. But soybean oil during most of that time has been trading down. This is the 4-hour chart. You can see we've basically been in a downtrend since the end of July. But, recently we've seen a potential shift here. We had this low put in. Then we put in this very strong move out of this zone. I mean, look at this back here. And then price chopped around, tried to go higher, pulled back. And then we had a big rejection off of this area, and now it's gone higher. And, from a standpoint of, again, if you want to draw trend lines, we can clearly make this out right here, and that we've broken that. So, again, from a seasonality standpoint, soybean oil tends to run up through mid-November, and then we tend to have kind of a pullback or a lull phase for a few weeks into mid-December, and then we rally again. So I'm not sure if that's how it's going to play out, but maybe we've already had the lull and we're just going to see this thing go higher. But I am holding this long position in this market right now because this does look pretty good. Although, we kind of had the same thing happening back here. Right, I had put in this low, went up, kind of stair-stepped higher. Then finally got to a point where it went, down and made a new low. But I would say the difference here is, first of all, seasonality. And second of all, this very large bullish candle, this is like not retail traders. This is like one giant candle. There was obviously something that off this level or news or something that came around this 48.50 zone that just pushed this higher. So it's a little bit different in that respect. Where could we potentially turn if the downtrend's going to continue? Would probably be, somewhere at the top of this range, somewhere up here. I certainly would expect to have some resistance up in this range. If price gets up here and starts chopping around, which it likely will, if it makes it that far, or maybe even to here, which isn't too far from where it is now. I expect to see some resistance. It's just a matter of, but if you don't see like big bearish candle form and push back down, if it's just small candles and it's just maybe going down but just kind of choppy, that's pretty bullish. That just means the sellers are trying to step in, but they're not having any luck. And more than likely, it'll pop right through that zone eventually. So, I'm bullish probably at least up to this zone. Then we'll see what happens after that and see if we can get through here. And if we can get through here, then I think we'll probably, continue the uptrend. So I'm remaining bullish on this, at least in the short term. And whether this turns out to be that turn to the upside we've been waiting for a long time, I don't know if we've got that yet. But, this looks, much better than it has recently. So, all right. So I'm holding that. So we'll see what happens on that one. Soybean meal is almost the exact carbon copy of soybeans. So we don't need to spend too much time on this. Still in an uptrend, but looking a little bit more bearish right now because we have, I don't really like the 1 hour chart. I like this 4 hour chart. Took out some structure here, right? Tried to go back up. So if we failed from here, and you can see I've got this yellow line drawn. This is like a little minor structure level here. If we break through here, then we may be going lower on soybean meal. So I'm kind of neutral on soybean meal right at the moment. All right, corn, really nothing to talk about in corn. This just continues to basically be sideways as well. We're just kind of chopping around in here. This is really kind of ugly. It looks like maybe, it wants to break lower, but you can clearly see kind of this support level the market's been holding right through here. So without any kind of real trend to speak of in between these two yellow lines, it's not really a market I'm interested in right now. Although, again, seasonally, corn should be trading higher, but again, we don't have COT data to really confirm that. So, inside this range, again, we've touched off the bottom of it again. So if we come up and start making higher lows again, okay, that could suggest a short-term move, but what happens when it gets back to the top of this range? Do we break through or does it roll over again? I don't like trading inside of ranges. It's just a personal thing. Some people do. I'd rather just wait until it breaks out and actually forms a trending phase again. And I'm not sure, we certainly don't have that right now. So, all right, Hogs. So Hogs we were talking about, and this one does also look like it's potentially making its turn up And we do have seasonality on our side here with hogs basically now through mid-February. And so, this does look pretty bullish here on hogs. And I actually probably should have taken this trade. Maybe I will. Okay, guys. So I just took this long on hogs here. So, yeah, we'll see. So we do have seasonality here on our side. We very clearly have a very bullish candle that happened yesterday. Kind of smashed right through this very obvious downtrend. So we'll see what happens here. But although I do expect to see a deeper pullback, so even though I'm long here, I don't know how long I'll hold this because I do expect to see price try to push back towards the breakout area. If you wanted to put a trend line on here, something like this. I don't know if it'll roll all the way back down here, but we'll see. But either way, I think hogs is potentially making I always say potential because I don't know. But just looking at the confounding factors like seasonality and price action here, and the fact that we were down so long that it's bound to eventually be bought up. And if we go out to a higher time frame, this is something else I wanted to point out with hogs. We had this low that was put in rejected way back here in July. This is back in mid-July. This is the 12-hour chart. And eventually went up and made a new high. We see we pulled all the way back to that area again and rejected off of there, and then had it followed up by a large bullish candle. So clearly this area around 78, between 78 and 79, somewhere in there, was an area of interest for buyers. Okay, so that's the other thing. Is just if you zoom out a little bit more and you can kind of identify these areas where there's been strong rejection off of, nothing's guaranteed, but we have this in addition to seasonality being on our side. This could be, turn out to be a good place to think about longs on this market. So I just took that, so we'll see how that one works out. Unfortunately, this is my funded account, and so what ends up happening a lot of times is they have rules as far as how much they'll let you have open when the market closes. So sometimes they auto close me, and sometimes I auto close in profit. Sometimes I auto close in loss. It's just part of their rules. But we'll see how this one works out. It's in a little bit of drawdown right now, but we'll see what happens. So, all right. So anyways, guys, I'm going to leave it there. If you have any questions or comments, again, make sure you leave them down below. Smash that like button. And maybe I'll pop back in here later in the afternoon at market close and see where we ended up with all this stuff. All right, guys, take care and have a good day. Trade safe, and we'll talk to you soon.